Welcome to the Nebraska Soybean Board Weekly Market Roundup. It's being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. Lots of things happening, no surprise. Geopolitical is the top of everybody's list as we watch what's happening this week in the world. We'll talk about the volatility we've seen in the markets. How do you keep the emotion out of everything? We'll talk weather as well, not only here in the States, but globally. And then if you didn't know, there was a cattle on feed report. We'll look at all that this week.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back again here to the Weekly Market Roundup. Shawn Hackett joins us this week. He's with Hackett Financial Advisors, and Darren Frye. He is with Water Street Solutions. So lots of crazy things, gentlemen, going on and what we've seen in this market trade. Whether you like it or not, volatility, I think, is going to be the key word. So I want to start out, Darren, with you. Let's talk about this geopolitical and what you're seeing.
Well, there's just a lot going on with Russia and Ukraine. And really the question is how much premium has been put into the market and how much is being taken out? Will this war take a while or will they take over quickly? What will the sanctions be like? So there's just a lot of uncertainty. But we saw wheat, corn, and soybeans, but led by wheat and then corn, move higher into really the Thursday overnight trade and then break hard yesterday. Finish that break maybe today. For the most part, we're probably 90% done going down, I'd say. But looking for a bottom maybe Monday, Tuesday, Wednesday. But this is just profit taking from the longs, I think. I don't know if anybody's wanting to really be short over the weekend with everything going on. But hey, uncertainty is high. You got weather issues around the world, but now you have the geopolitical side.
Shawn, I'm going to put you in the hot seat here a second, because when we talked on Thursday, we were talking how crazy volatile these markets were because of geopolitical. And you made the comment to me, watch out, because as fast as it went up, it could go limit down, and kind of describe Friday's trade.
Yeah, I actually say, it wouldn't surprise me. We could walk in on Friday and we'd be limit down because the winds of the market would have changed just a little bit. Very, very hard to figure out geopolitical day to day. The way we try to handle it for our customers, Susan, is we try to be tactical. If the market's giving us a crazy surge into levels that make sense for our customers, then we try to do things smart on the hedging side to protect downside price risks. And conversely, you get days like today, or maybe some carryover into next week, we're looking for opportunities for the livestock producer to do something smart. So we're not trying to predict the volatility. We're just trying to take advantage of it when we see it, when it does something that makes sense to our customers from a risk-reward standpoint.
Can we call it a knee-jerk reaction to Thursday's trade?
I'd call it a high knee-jerk reaction. Yeah, I mean, pretty much that's what it is. High emotion, very high expectations in both directions. And quite frankly, like Darren said, we really don't know what's going on yet. We just really don't know what's going on yet. And so people are free to think in so many different ways that you get these sideways trade motion reactions. And the margin clerks have been very, very busy in both directions as well, making sure everyone covers their margin calls.
Yep.
Darren, I had a producer ask me this week what was going on with the ports being closed, and my screen is not allowing me to bring you to the forefront, so I apologize. There you go. Producers wondering, when they said they were closing those ports in Ukraine, what that meant for the grain that was sitting there. Did they get the grain out in time? And does that mean maybe some more export opportunities for the United States?
Well, if it's temporary, it won't be much change at all. But if it goes for a week, 2, 3 weeks, then you're going to see this volatility as people scramble to replace their needs in the cash market. Most of these cash markets, they might have hedges on, but they're always buying a month or two out. And so that is something that consistently has to happen over and over again. And just like Shawn said, there's just going to be volatility both ways. And Wednesday, Thursday surge led to today's break. But yesterday, the break started. We took beans from basically, that 1759 level, clear bound to maybe $1 to 1659 in like an hour and a half's trade. So it's crazy right now how volatile the markets are. And I think that we're going to continue to see, people want to buy on breaks for feed use and any ownership. and sell on bulges to get more hedges on the books.
So I had done some reading on Friday morning where the ag minister in China said they were going to look to not import as many beans. What's going on there?
Well, I think they're just going to try to release from reserve. I saw some rumors around 700,000 metric tons, basically a week they're going to do for the next 2 months. And obviously China is short bought. They're the biggest short in the market, in my opinion, in the soybeans, but also they need wheat and corn. You wouldn't have the high prices interior in China if that wasn't the case. Just like last year, they bought an incredible amount of corn, released an incredible amount of wheat, and now they're doing it on the bean side. We know that meal, crush margins have been stinky, but obviously this is going to improve things and improved a lot just with this break in the bean market. So I think they still need it. And I think that's one way they try to get the market talked down, manipulate it so they can get better buys in place.
All right, well, we'll continue with the Nebraska Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoff. Shawn, want to talk some weather? I mean, it's not good in the States. We know from Oklahoma to Colorado, there's big concerns for the winter wheat crop. To South America, there's still some weather concerns going on there as well.
Yeah, and Susan, we have established ourselves to be pretty good at these longer term range weather forecasts using our natural climate cycle algorithm. And we've made a forecast a long time ago that this particular planting season in the U.S., we think is going to be pretty chaotic. We're looking for an extremely late ending winter, lots of snow, in some cases, bombogenesis blizzard-like conditions. And we really feel this is going to push a lot of acres away from the corn market. And we think it's going to make the post-dormancy season of especially the Kansas City winter wheat market really, really challenging. Both of those markets can ill afford anything but a really, really good spring season. And so, as Darren said, it does seem like we could be looking at China being short grain. And if they get a weather problem that concerns them that we're not going to have the grain that they think we're going to have, it could set off some pretty aggressive buying on their part. And that's why we've been sort of warning or at least making sure our livestock producers are protecting about a potential for a blow off top of that sort this spring, if we're correct about this weather forecast.
So as we hear this weather talk, and I just came off of the Wheat Quality Council's annual meeting taking place in Kansas City, guys were talking about acreage switch opportunities, especially when you look at areas of Oklahoma and Kansas who might go to cotton or milo, maybe not as much corn or beans, but we know the pressure is going to be there.
Yeah, I mean, look, when you're dealing with dry ground, it does suit some of these other crops in a better way. The Dakotas suits other crops in a better way. We've had a very high oats price, for example, all winter long that works for a lot of the producers, especially in Canada. So we just think when we're looking at the whole picture here, we just think it's going to be very, very difficult for the corn market to deliver on acres through lack of economics, lack of essential soil moisture. And additionally, remember, you need that 45-degree temperature or more to allow that crop to germinate correctly when you plant it. And we think a lot of those northern acres are going to be starving for that temperature to get to the right level. And just means to me, we want to really be looking at the corn market as a special situation here.
Darren, what about for you? What are you hearing from folks across the Midwest and acre weather concerns?
Well, it's interesting what Shawn brought up. I kind of think the corn acres, my number's 90.5. I'm not as bullish on acres as maybe the outlook forum or even other advisors, but I kind of thought that, hey, beans are trying to bid for some acres after South America. We know that oats, spring wheat, or cotton, rice, hay is at all-time low as far as acres, and we need feed for these livestock animals. I just think corn's going to have a hard time along with high fertilizer prices. If Shawn's right about this later spring, I mean, that's going to have really a lot of pressure on how do you get the corn planted? How do you get the acres? How do you get a good stand established? And I know that we got quite a bit of snow in North Dakota and north central Minnesota, which means that's going to maybe push them into a later spring to begin with. So I think it's quite interesting. And I think corn could be that commodity you want to be longer term. Beans top out first, in my opinion, and then corn. And that was interesting, Shawn. I really like that. I hadn't thought much about how late spring could be, but boy, that is something this market doesn't want.
Well, we want to switch gears real quick here and take a look at the livestock side of it. I want your thoughts, Darren, on these cattle and hogs. I mean, we kind of came out strong for a while, but kind of finished with some mixed to negativity on the week.
Yeah, I think we're in the midst of a correction. The hogs kind of had a mini blow off here last week. I was kind of specking and being long hogs, but got out way too early, and they went way beyond what I thought. I was looking for a correction. Now I think that correction is going to begin and probably take us down in that 95 to 100 mark in April. And then I think we resume the uptrend again. And cattle longer term, I'm really bullish, but we just got to cycle through this correction, and we're just not done going down yet.
All right, cattle on feed report, Shawn. What's your thoughts on what those numbers had to say today?
I don't think there's any big surprise what we're seeing in the numbers. The market, I think, might have been looking for a more bearish number than we saw today. With a big break we had late week, that might mean we could bounce early this week, or next week, that is. Longer term, I mean, the cattle market has some very, very thin supply coming later in the year, but it's battling some supply in the spring. It's battling this worry over economic weakness from interest rates rising and from some of this high inflation, maybe taking disposable income away from the marginal buyer who would go out to the steakhouse and buy steak. So I think, as Darren said, there's some headwinds. I wouldn't call them major headwinds, some headwinds that might keep this market, capped for a little while. But we think later in the year, we might be looking at something akin to 13, 14 kind of style cattle market. But it's gonna be a slog for a little while. I'm pretty much in agreement with Darren on that.
All right, lots of things that we looked at today. Thank you both for joining us this week. And want to remind folks that commodity futures and options do involve a substantial risk of loss and are not suitable to all investors. That has been the Nebraska Soybean Board's weekly market roundup, being brought to you by Nebraska soybean farmers and their checkoff. Enjoy the rest of the weekend on the Rural Radio Network.